Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Friday, March 26, 2010. Well, a great change of character for this market today, and we have a very large red body candle, and that's in stark contrast to the previous 2 or 3 days trading with green body candles, and certainly that candle from 2 previous trading days ago, which had a very large green body. That large green body meant that the buyers were in the ascendancy. They were making some very solid net bullish progress, but now all of that's evaporated, and we did have a hint that the market may have been ready to sell off from the previous day's candle. We had a very large reduction in the size of the body of the candle, and that meant that the buyers weren't making as solid net bullish progress as they were the previous day, which raised some concerns. So today we have a large red body candle. The red body candle tells us that the sellers made some significant net bearish progress on the day between the open and the close. And they've also opened at the high and closed almost immediately at the low. That suggests that the sellers were in control of this market the entire day, and we haven't seen a day like that for the last few weeks in this market, so it may be significant. The sellers also showed that they were very keen to taking this market lower, and that's because of the close being a long way below the previous close. But they also showed very strong commitment and closed in control of this market. Now, this 82 level of resistance that we highlighted previously is certainly holding, and even though the market closed just up above there, the sellers were strong enough to come in just above that area and sell the market off, and we need to beware that areas of support or resistance don't happen at exact levels. So at say exactly 82, they do work in zones, so you have to give these areas a little bit of leeway. So the sellers were still willing to come in and sell this market off in force as the market attempted to trade up above there. Now, to the downside, we do need to watch this 81.4 region all the way down through to 81 and then 80.4. That's a potentially strong area of support for this market, and that's because it was a previous very strong area of resistance. We can see the shadows on all these candles and the strong selling that came in as the market attempted to trade up to around those levels. So that will be a potentially strong area of support. Interestingly, the Kijun-sen has actually turned flat, and quite often when the Kijun-sen turns flat, the price action tends to be attracted back towards it. So that means that there is a very strong possibility that this market may retrace back to 80.875. So a very strong chance of that. And the only thing that might hold that up is this area of potential support from 81.4 down to 81. So we do need to temper our probability of the market trading to that zone with the strong potential for support above there. Now, the market is trading above the cloud or the Kumo, which means that it's still overall positive, but it's also trading up above the Kijun-sen and the Tenkan-sen, which means that in the medium and fast-term timeframes, the market remains bullish. Having said that, though, the market was looking a little overextended, and markets act like rubber bands. They tend to move away from equilibrium to a level of disequilibrium and a high level of disequilibrium, and then move back towards equilibrium. They tend to be mean reverting, and that's what is possible here, where the market may move back to the short-term and medium-term equilibrium as described by the Kijun-sen and Tenkan-sen, and then certainly back to the longer-term equilibrium as described by the cloud or the Kumo. So we get that rubber band effect where the market will move to a strong level of disequilibrium back to equilibrium and bounce back like a rubber band that's been stretched too far. To the downside, below the 80.875 level, we have certainly the bottom of that zone, 80.4, as a potential area of support, and then down to the top of the cloud, 79.60, down through 79.50, and all the way through the cloud here. So we have very strong support all the way down at various levels, down to 78 for this market, or even perhaps below there at the moment. To the upside, though, above the 82 region, there isn't a lot of terribly strong resistance until we get up to around 82, 86, and we have a large zone. So if this market can become bullish again and take out the 82 with a very strongly bullish close, then there is potential for substantial price appreciation. So we need to wait and see how this market develops. If we have the low of the current candle taken out, then there is potential for the market to come off. But certainly if this 82 region and the highs around these two previous candles are taken off in the bullish close, a strong chance of price appreciation.